Well, good morning, everyone. Welcome to this webinar. I'm very happy to welcome Rudy van den Einde, who's heading our global thematic equity team, who's also heading our healthcare strategies team. These healthcare strategies are focusing on several aspects of the healthcare area, for instance, biotechnology, but also oncology. That will be one of the focus of this day. May I remind you that there is a Q&A application on the right side of your screen. You can ask questions whenever you want, and we will answer them at the end of this webinar. And a replay session will also be available in a couple of days. So, Rudy, thanks for being with us today. May I ask you a first question? Why investing in healthcare? Welcome, Rudy.
Yep. Thank you, Nicola, and welcome everybody. And thanks for taking the time here for this webinar. So we'll first talk a bit indeed, why should anybody consider investing in healthcare and what are the arguments? So if we would move to the slide number 3, we put some arguments together. And you will see that from several kind of arguments, and some are really long-lasting positives. If you start with aging, you think about healthcare, disease typically comes with age, and we will explain every argument a bit more into detail. But disease typically comes with age, and as we know, the global population is aging, even in countries like China. It's not just in the developed world, it's also in countries like China. So the number of patients, the number of people who need to be treated goes up constantly. So this creates a big medical need, but also obviously opportunity for the companies that respond to this medical need. A second argument, because if you think about, okay, you need to treat people, is the fact that innovation is very much alive. Innovation is alive, not just in drug development, but in many other disciplines of the healthcare sector. So with that innovation, companies can create their future, their luck, their profitability, and help treat patients, obviously. A third argument, and here there is some debate around this, is the pricing power. Then obviously, all those technologies, those drugs, they are protected by patents that have a certain lifetime. And during that protection, there is quite good pricing in general for drugs, but also for other technologies. And in general, medical technologies, if you think about pacemakers, cardiac devices, hip implants, all those things, there are not that many companies that are able to make them in a sophisticated way. So it's a bit of an oligopoly where pricing in general is pretty good. So in general, in this sector, you do have very reasonable pricing power. Politics come into play, and we'll talk a little bit about the outcome of the elections in the US, which is somewhat supportive for the sector. But in general, one can say pricing power is very much present. And then furthermore, if you think like in many other sectors, emerging markets are interesting, very interesting. We'll talk a bit about the reimbursement in those markets, but there are clearly some markets like China clearly have become very interesting markets for global healthcare companies. There is also innovation coming out of China, but at the time being, it's mostly a very interesting market. And then lastly, but not necessarily uninterestingly, it's a sector that is not very cyclical. And again, it's very intuitive. If you think about healthcare, you think about disease. Disease has nothing to do with the economy, or not a lot at least. So in the end, disease needs to be treated. And that means that the sector by itself is not very cyclical, is not really depending a lot about interest rates, dollar rates, or whatever. It's a question of you have to treat the people and you have to come with the right solution. So innovation is key, but the sector is not very cyclical by itself, which can be pretty interesting in a portfolio construction. So if you go by those arguments a little bit, we want to just give a little bit more granularity on them on the next slide. You can see that, okay, the aging of the population, we know intuitively it happens, but if you see here the number of people above 60 from 1990 to projected 2100, and I agree that probably not a lot of us will still be active in our industry here in 2100, but still overall, this is a very constant CAGR. And one can say of all the tailwinds that one can imagine for all kinds of sectors, we all try to predict the future. And this is one of the most reliable tailwinds, because the people who will be over 60 in 2050, well, they're obviously born already. So we know that this will happen. This is one of the most reliable, predictable tailwinds I can imagine of all the possible tailwinds that are always put forward for all kinds of sectors. Aging, I mean, disease comes with aging, we have said. And on the next slide, you can see that to the left, indeed, this is the case. And very simply, on the vertical axis, what you see is the expenses, annual expenses in healthcare per head of the population. On the horizontal axis, you see simply the age brackets of that population. In this case, it's the Canadian population, but it's the same, obviously, in every country. And you can see that from the age of 60, typically healthcare expenditures per head of the population are starting to rise. And they continue to rise in an almost linear way. As the older you get, unfortunately, well, disease is also there and needs to be treated. So this is, again, a very reliable driver. To the right, you explain a little bit already on emerging markets. And you see on the horizontal axis, you see a proxy of the degree of development of a country. It's just one of the ways you can measure this is GDP per capita. And on the vertical axis is the expenditures in healthcare as a percentage of the GDP. And the correlation is not perfect, but you can see that somehow the richer a country becomes, the more developed and the richer, the more that healthcare becomes a bigger part of the GDP. And it's simply because the population, once there's a certain level of development and financial adequacy, the population simply wants access to good healthcare, wants reimbursement, and in most cases also gets this. And we'll see it a bit more in detail on the next slide when we talk about the situation in I know we come back on that. So first we have the argument of innovation, and just here we give a couple of examples. We can talk for the rest of this day about innovation, but it's not just drug development, it's not just new drugs. People in the healthcare sector, they think it's only about drugs. No, you have medical technology also, and this example, intuitive surgery, one of the best performing stocks of the last 10-15 years. Is a leader in what is called robotic surgery, a robot-assisted surgery. The Da Vinci system that you see here is pretty famous and gives a lot of advantage over classical surgery. So it's not just a robot doing the job. Obviously, the surgeon is still there, but this is working together of man and machine that gives you better outcomes. And there is a continuous evolution of that nice looking Da Vinci there, in the sense that also artificial intelligence is present, and the robot is learning from every surgery it does. So it's a continuously learning process and a continued improvement of that technology. Drug development still is important, obviously, and just very briefly, what you see on the next slide here is a cancer cell. And you see on the surface of that cancer cell, you have all kinds of receptors, and we don't have the time to go into detail here, we don't have to. But you have all kinds of receptors that sometimes are very specific for that cancer cell, for cancer cells, for that type of cancer anyhow. And drugs can be made to bind to that receptor, so that very specifically the drug binds to the cancer cell and starts a chain reaction that can be destruction of the cancer cell by the immune system. There can be all kinds of ways in which an antibody, and we're talking about antibodies here, in which an antibody can destroy such a cell. So it's another example of innovation. And the first antibodies that work on this in this way have been approved end of the 1990s, and many are on the market now and are selling extremely well. So 2 examples, they're just examples. We're not saying this is the best companies at this point. No, they're just examples of innovation in medical technology and in drug development that have been going on and that have changed the outlook for patients. Just to flip back on emerging markets here as an example, we talk about China. And you see that, of course, healthcare expenditure per capita, per head of the population is much bigger in the US than in China. China. So there's a lot of catch-up potential here to be harvested. On the lower left, you can see the growth of the pharma market in China. And obviously, again, it's a very nice CAGR and a very reliable CAGR. So it's not always that the growth is that much higher than in other sectors or in other innovative sectors at least, but it's very reliable. It's pretty reliable growth. And the same goes for the insurance coverage. Now said, populations that want more and more access to reimbursements and to modern technologies. Well, the Chinese government has done big efforts over the last years, and the graph here stops, or the chart here stops in 2018, but this is an ongoing process. So more and more people have access to what is called the National Drug Reimbursement List, which means they have often access to quite modern drugs and even the same kind of drugs as we get in the countries like the US or here in Europe. Well. And then the argument of low cyclicality. We try to somehow graphically show it here. In the dark blue line, you see the earnings of the S&P 500, so the stock market in general. And you can see, okay, it's a nice trajectory, obviously. Stock market tells you the same if you look at the S&P closing of yesterday. But it's pretty volatile also. There are moments, obviously, that the earnings of the S&P 500 aggregated come under pressure. Like in 2008-9, the financial crisis. I mean, all kinds of issues. We had now, obviously, the global pandemic. If you look at the healthcare earnings, and that is the S&P 500 healthcare companies in the light blue, they're much more smooth. And again, they're not necessarily rising more, but they're much smoother. So you have much less this kind of cyclicality. And again, which is very intuitive, as disease is always there and needs to be treated. And then finally, we have all those arguments. And you can say those arguments are not necessarily new. And they were already there a couple of years ago. You could even say some of them were already present 30 years ago. So does this work? In the end, do we have a sector that outperforms? And the answer is yes, it does. We show here the last 20 years. In orange red, you'll see the MSCI World Healthcare. It clearly does better than the MSCI World, which is then the proxy for let's say, global equity in general. And it clearly does better. If you would go back 30 years, 50 years even, you would come to the same. But those MSCI sector indexes were only created end of the 1990s. But it's a sector that, give and take some moments of weakness, as you can see here in 2006 and 2007, it somewhat underperformed. And if we remember what happened in 2006 and 2007, it was a global boom of growth, and commodities, energy names are very popular. And there was a boom really of mining and energy names and industrial companies. That ended with the global financial crisis because we overdid it in the end. And then healthcare fought back, obviously. So there are moments where there is some relative weakness, but in general, structurally, this is a sector that outperforms because of all the drivers that we have mentioned. So this is an overview of why healthcare. And the only thing where there is a debate, obviously, is on the pricing power and the politics, but we'll come back on it probably in the Q&A session. But all in all, a very constructive environment with tailwinds that will linger on for many, many years to come. How is Candriam fitting into this? So what is our expertise? If we look at the team, the actual team is 4 people, and we have 3 healthcare funds managed by those 4 people. We have an open vacancy for a medical technology analyst that we are close to filling in now. And I have the impression we will not stop there, and that next year we will further increase this team, as obviously we believe in this sector and we want to be really present. We have successful funds. We want to be really present in this sector, and we invest in it because we believe, obviously, in this long-term outlook for the reasons I just mentioned. If you look a bit at the profile, and we don't have time to really go into investment process, but you see that 3 of the 4 people have a PhD, usually PhD, Sarah, for instance, in translational medicine, the other 2 in biochemistry and biotechnology. So we have a lot of people with a scientific background. Because, and it's just a general observation for the investment process, and it's very core and key in our investment process. If you invest in healthcare, you have to think like a scientist or a doctor, and because those products, again, they are consumed because somebody has an ailment that needs to be treated. They're not consumed because they taste well or the packaging is nice. No, they're consumed because they help patients. So you have to think like a medical almost and like a scientific person if you really judge the pipeline and the products of a company. And this is very key to projecting their future growth and profitability. But just as an aside, do we do it well? On the next slide, you can see that, yes, we've had quite some awards. So to the left, you see the awards for a biotech fund, and just a selection. We also have a silver medal from Morningstar. We're pretty proud of that one. To the right, you see the first awards we have obtained for our oncology fund, a fund we launched at the end of 2018, and we will talk a bit more about that fund afterwards. Those awards are not on performance. The one to the right are not on performance because the fund is too young, but we'll talk about the performance. Those are more on the innovative side and the ethical side of launching this fund. But again, we'll talk about more in the future, in the next minutes about that. And then, does this translate into commercial success? Yes, on the next slide, you can see that our assets have been growing. In blue, you see our biotech fund. In orange, a global healthcare fund that is mostly sold by our distribution partner here in Belgium. But stay tuned on further products that we will launch in due time. And then in green, we see the oncology fund that I just mentioned, where the assets have been rising very nicely. The chart is slightly outdated already. We are higher than this. So well above 4 billion, all the funds combined. So yes, this success has been following the performance and obviously the underlying logic of investing in healthcare on a long-term view, at least. And then just briefly on the next slide, I mean, again, on the sector, okay, how does it look like? If you are assembling a portfolio, okay, how does this look from a regional standpoint? To the lower left, you see it's not that different from an MSCI World. I mean, you have obviously 2/3 is US, so it's a bit more than an MSCI World, but not meaningfully. Because innovation, if you talk about innovation, you in many cases end up in the US, and it's the same for this sector. To the right, you see the subsectors or the industry groups, as MSCI likes to call it. More than 40% is pharma, so people immediately think about pharma if you think about healthcare, but you see there are many other subsectors like medical technology, life sciences, which are pretty interesting and well-performing sectors. So by subsector, this is a well-diversified thing. All right, so this concludes a little bit about this sector. I promised.
Already, maybe a quick recap. Many thanks for this, because indeed we see many strong drivers that remain even stronger now. But this very specific market calls very specific profiles that you have in the team, and you decided to give a more focused on a very particular strategy, which is on oncology impact. Could you tell us a bit more about this one?
Yes, sure, Nicola. And again, we already have a quite successful biotechnology fund. So people might say, okay, why launch an oncology fund? Is it a question only of performance? No, and there is strong ethical reasoning, but we'll come back on that at the end of the presentation. But on this slide, you see again, I mentioned disease comes with age, and this applies even more to cancer. And unfortunately, some children are hit by cancer. Fortunately, we can treat that, at least in general, quite well. But as a rough rule, cancer comes with age. And you see it here again on the left chart here. From the age again of 60, it starts to be a real risk, and it goes up pretty fast and pretty linear way with age. So again, aging of the global population gives you many more patients that need to be treated, which obviously for the companies who are active there are also an opportunity. The expectation of the worldwide number of people dying from cancer obviously shows high growth because of that aging. But fortunately, there are solutions, more and more there are solutions. On the next slide, maybe just a very quick overview of how is cancer treated and what kind of innovation have we seen historically. And to the left, you see that the the well-known chemotherapy was discovered during the Second World War. It's actually a derivative of mustard gas from the First World War. And those chemotherapy drugs have been used for almost 50 years. There was nothing else. There was not a lot of innovation going on. We don't have time to go into the details of the why, but it is a sad thing to see. And end of the 1990s, I mentioned those antibodies that target certain receptors on the cell surface. Well, the drugs mentioned here, Herceptin, Rituxan, they were approved end of the 1990s, and they revolutionized the way cancer is treated. At least some cancers can be treated. And ever since, you can see we have the kinase inhibitors since 2006. Immuno-oncology, so using the immune system to better target cancer since 2011 with continuous improvements ever since, and then even cell therapy and very sophisticated technologies since 2017 with continuous evolution. So there's a lot going on, fortunately, but also this creates also business opportunity. And again, helping patients and having, let's say, as an investor, a good return usually goes hand in hand. So again, those products are consumed because they're good and they help the patients and for no other reason. On the next slide, so talking about the market opportunity, because we really had to carve out of one disease when we launched this fund. So you can, at the time, a very important reason to have this fund was the ethical background of really helping companies, big and small, and supporting companies that develop good products to diagnose and treat cancer. But also, obviously, we want a good investment. We want a good return for our investors. So does it make sense? Is oncology a big sector already? Yes. Here on this slide, you can see on the horizontal axis is the expected growth per therapeutic category. So all those colored bubbles are specific big disease areas like cardiovascular, autoimmune disease, immunology, and obviously oncology also. The vertical axis gives you the size of the actual drug market. Actually, though, the figures from 2018, but it's obviously still very much relevant. And you can see oncology is already the biggest segment in the drug markets, bigger than any other disease. And on the horizontal axis, you can see that the expected growth, this is an expectation, obviously, but due to innovation and rising patient numbers, the expected growth is also higher than in any other category. So from an investment standpoint, also having a carve out of this disease, again, makes sense. If we think back about our biotech fund, this is a fund looking at all diseases, but mostly from a drug perspective. If you think about this fund, it targets one disease, but then from a very broad angle. If you look at the slide here, and it starts with research. So in the universe for this fund, we also have companies that manufacture and distribute research equipment, lab reagents, and so on. The companies mentioned here, they're just examples. That doesn't mean that they are in the fund, although most of them actually are. So that's the first thing. Very important and often underestimated is diagnosis. An early diagnosis often means survival. Huge difference. So technology now will make it possible that we can diagnose cancer earlier because the tests will become easier to do. It will be, for instance, based on a blood test, and a blood test obviously is something we routinely can do much easier than an endoscopy, to just give an example, which is something that is not pleasant and people very rarely do from a diagnostic perspective. So very important that we support the innovation there in this segment also. Once a cancer is diagnosed, you have to understand it better. I mentioned on, if you remember the slide of that big cancer cell with all the receptors on the surface. Well, we have to understand the cancer of a particular patient. We have to know, okay, what mutations are driving this cancer. This is linked to those receptors, can be linked to other things. So the genetic footprint of a cancer needs to be established because drugs are often made to attack that very specific genetic footprint. And then obviously we have to treat it. Once we have diagnosed and profiled the cancer, we have to treat it. We think always intuitively about drugs, but this fund is also about the more classical ways of treating cancer, like surgery and radiation. And fortunately also there is improvement. And then lastly, obviously the drugs are there, and there is a huge number of drugs in their development. I think it's around 1,500 cancer drugs are being tested in the clinic now. So this is a huge innovation going on. We'll very quickly go over the investment process here. You see on the next slide, you'll see, okay, well, what is oncology? How do we come to a universe? Well, we start to the whole quoted universe, which is above 250 million, above 100 million in market cap, brings us to roughly 25K stocks. It's a bit of an academic figure, obviously. Then we will screen, really a thematic screening, okay, who is linked to oncology? And we screen using Bloomberg, but also specialized software like AlphaSense. We screen on buzzwords like oncology, cancer, liquid biopsy, all kinds of buzzwords that help us find companies that are somewhat related to oncology. Brings it down to roughly, and those figures vary obviously by IPOs and other things, roughly brings us to 300 companies where we will analyze them and then quickly from a more fundamental standpoint see, okay, the relevance is not good enough. They are linked to oncology research, but the relevance is not high enough. The products are not differentiated, or it's too small in the sales figure of the company. It's not really important. And for instance, IBM would typically come out because of Watson, DR Watson, but again, it's not relevant enough in the big IBM pool. And then in the end, we have roughly 150 companies that are extremely relevant and innovative, and out of those, we pick between 50 and 70 to be represented in the fund. Why do we pick those? Obviously, the innovation, the clear investment case, and the upside to our price target. Again, we want to mix the support for good companies that really develop technologies and drugs with a really good investment. In the end, we are investors. We want a good return, obviously. So this is always very important in our mindset also. If companies reach a price target, we will reduce a position or even sell position. The whole investment process is linked a lot or inked a lot on what we do in the biotech fund. And you see it on the next slides, but we won't have time to really go into detail because there are some other aspects I want to put forward and I want to somewhat remain in our timelines. But the investment process is mostly inked on what we've been doing in our biotech fund for 20 years. We've proven it works well. So there's a big focus on clinical data. And you see it even more on the next slide, where really most of the day as a team, we are talking clinical data. And that's where you don't want to be wrong. If you're right there, you can make a lot of money. If you're wrong there, you can lose a lot of money, especially if you are talking smaller and not yet profitable companies, but those companies can give you also the best alpha. So very much scientific. That's why we are hiring scientific people. The financial part, those people, they master pretty fast. My co-manager, Servaas Michielsen, has a CFA, full CFA. So the financial part is easy to master. The scientific part needs a lot of experience. On the next slide, maybe, because we mentioned the whole time, we do mention those clinical data and a focus on that. And people often ask, okay, where do you get those data? Where do they come from? Do you have a competitive advantage there? Well, obviously, we work on public data and we don't have inside information, obviously not. We work on the public data that are available. And fortunately, in this sector, in the healthcare sector, when companies have clinical data, they bring them out in the public domain for several reasons. But they are in the public domain, and they are then also presented at medical conferences. You see them in the middle here, companies like ESMO, ASCO, American Society of Clinical Oncology, ESMO's European Society of Medical Oncology. So at clinical medical meetings, the details of those trials are presented to doctors, but also to investors if they wish to go there. We have also a specialized database. You see there in the middle right, Biomet Tracker. We obviously talk to the companies, but also to doctors, to key opinion leaders, as they're called, to see if our assessment of a drug or a technology is the right one, and if the people who treat those patients would agree with what we are thinking. And on the next slide, you see a bit how we do it. And we have a deal with the US company called GLG, who have basically a very big Rolodex, and they can bring us in contact with doctors. But it can also be specialists on patents, because intellectual property can be a sticky point. It can be manufacturing specialists. If you talk about new technologies, new kind of antibodies, manufacturing can be difficult, and sometimes we talk about manufacturing specialists. So very important to vet our opinions with people who are actually doing the job done on that. How did the fund go in terms of performance? You see here again, since launch, a pretty good performance, very good performance. We're very happy with that performance. There is obviously, you can see here and there some corrections. Most of the spikes up are because of M&A, very typically. That has a halo effect on the sector, and we'll come back on the mergers and acquisitions. Some of the corrections are also because equity markets have been weak, especially in March, April, because of the pandemic. Very briefly, this fund also corrected, but it was amongst the first of our funds to reach new highs year to date, and then even go on to all-time highs. So because again, this sector obviously is not negatively impacted by this pandemic, and some of the companies by coincidence more have even profited from this pandemic in terms of commercial outlook. In a more relative way, because this chart tells you a fund that has been going up, but if we move further, and we'll put it graphically on the next slide, one further, we don't really have a benchmark for this strategy. Obviously, there is no oncology benchmark. So you can plot it against an MSCI World. If you go in such a fund, at least you want to do better than the MSCI World. It has some of the characteristics of a global healthcare fund. So we also plotted against the MSCI World Healthcare, not as a real benchmark, but as a very loose reference index to say, okay, how are we doing against healthcare in general? Well, we are in orange here, so we are doing better. So we're very happy. Not sure, obviously, if you can repeat that kind of outperformance every year, but until now, until the launch in November 18, we're extremely happy with the performance of this fund. I mentioned mergers and acquisitions, which are very typical for the biotech sector, but also obviously also for this fund, which partly also invests in biotechnology. So you see we had a quite high number of acquisitions in the short history of this fund. This year we already had 5 acquisitions. Varian, upper left, is a medical technology company, is a radiation company, basically was taken over by Siemens Healthineers. So the M&A is not just in the drug space, but also in the technology space. And then I want to mention maybe how does it look on the next slide. Many questions are typically on, okay, if I put this in a global portfolio, in a fund of funds or whatever, how does it change the characteristics of my portfolio? Well, if we look here a little bit at those pie charts, and by subsectors also this fund, because it goes from research over diagnosis, profiling to all kinds of treatments, it has exposure to many subsegments of the healthcare sector. So that's why I say it somewhat resembles a global healthcare fund. By region to the lower right, it's pretty normal versus an MSCI World. It's not dramatically different. So it doesn't bring very strange regional allocations with it. By market cap, upper right, we, just like in our biotech fund, we focus both on big and small companies. So this is a mix of big and small companies. And the bigger companies that typically medical technology or pharma companies, they have a reasonably low volatility. That means that the volatility of the fund by itself is very reasonable and much lower than, for instance, a Nasdaq Biotech Index, which would be on the high side of the volatility scale in healthcare investing. Voila. And the next slide is very important on why we have, in the end, we have launched this fund. Obviously, it potentially is a very good investment, and it has been an extremely good investment since launch. But there are also some kind of more ethical considerations. We wanted a fund that allows people to fight back against this disease that hits so many people, and everybody knows somebody with cancer, unfortunately. So we fight back by investing in small and big companies that come with solutions, and we work on solutions. But we also pledge at Candriam, we will donate, in fact, we do donate 10% of the net management fee to charities and research organizations that work in the field of cancer. Because you also have to stimulate the very early stage academic research, the not-for-profit research on which companies then build and develop products, technologies, and drugs. Voila. Okay, I hope I give with this a bit of an overview on how this fund looks, why we have been launching it, how it performed, how we manage it. There's many things to say. We have a couple of examples, but unfortunately we don't have time to go through all of them. We have on slide 39 basically. It tells us a bit of okay, why, what is the aim? We want with this fund to contribute to a future where obviously oncology or diagnosis with cancer is not a death sentence, but eventually in the future it might become something like a chronic disease which is constantly treated but can prolong the expected lifetime quite a lot, or even come to a functional and full cure. So that was also the aim, being a good investment, but also helping research in this sector. So this opens it up to questions. So please feel free to bring all possible questions on the table. But I'd like to thank you already for your time here, for your interest in the sector and also in this specific strategy. So thanks for your time. I hope it was very helpful to you.
Well, many thanks, Rudy. We indeed received several questions. One of them being, what would be, according to you, the major impacts of the current crisis, the COVID crisis, on this sector?
Well, on healthcare in general, not a lot. And some sectors have somehow had new opportunities because of this. Maybe think about vaccines, but we also think about the diagnosis of the pandemic of COVID-19, which has opened completely new healthcare markets in terms of diagnosis and testing. For the oncology sector, more specifically, the impact was neutral to, I would say, very slightly negative. If you think about people who are already being treated, most of those treatments, especially drugs, they continued because people still had access to drugs, obviously, either in a normal way or even over e-health and e-prescriptions and everything. So you see it in the quarterly reportings of healthcare companies, and more specific, the ones that are very heavily into oncology, their quarterly reporting, and even including the ongoing Q3 of this year, most companies had very good results. So there was no real impact in terms of existing sales and treatments. Some clinical trials, especially very early ones, were very slightly delayed. But again, oncology being a very severe disease, most people obviously continue to enroll in clinical trials because they have a very bigger issue, a much more serious issue, or an even more serious issue than a COVID-19 infection might be. So in the end, you don't see a big impact on this sector. No, it's pretty neutral on the sector. Some of our companies, by coincidence, again, were also active in things like COVID testing, so they had a quite good performance. But strictly spoken, the oncology sector, the impact was neutral to very, very, very slightly negative, but not in a meaningful way.
Okay, thank you for this. Another one, many companies derive a substantial part of their revenues from the US. How can they be affected by the recent results of the election and any tax increase, if any?
Yeah, good question again. Well, the US elections are very important because the US is very important in healthcare because they set the pricing mostly. They set even the global pricing, especially in drugs. And it's a very complex system. And again, we won't have time to go into every detail, but the highest drug prices in the world, at least the sticker prices, the official prices, before the private health insurers start to negotiate, the highest are in the US. So if you would have a political interference in those prices, and obviously this debate has been going on for tens of years, even for a century, and because drug prices in the US, they are set in the private space. So the biotech and pharma companies will negotiate with private health insurers, and the government health insurance systems like Medicare and Medicaid, they are by law forbidden to negotiate with pharma companies directly, because they are a kind of monopoly. Within the state, they are the monopoly. The private insurers are many private insurers, obviously. Each of them is not a monopoly, so they all negotiate with pharma and biotech companies. The Medicare and Medicaid, so the state part, will start with the private drug price and will have an extra discount because they're a big buyer, obviously. So that's how the system works. So it's very important that this stays like this, in the sense that if you would have direct negotiation by the state, obviously being Medicare, Medicaid being the only state systems, you would have a kind of a collusion, market collusion, and they could dictate prices much lower, to a level where in the end innovation and research would be impacted. That would be a danger for the sector. Politically, I mean, it depends, but if you look at the outcome of the election, a split Senate like we see now, where it's really literally between the Democrats and the Republicans, it's 50-50. Nobody has really the power base to come with extreme proposals and extreme measures. So this complex healthcare system has its fair share of faults, but they're not dramatic faults, and they can be corrected. And that doesn't have a big impact on the sector, not on healthcare in general and not on the oncology sector. But the important thing is that there are no extreme changes. And with such a split Senate, and with Joe Biden being a very moderate politician with moderate views and open to dialogue, you would think that in the end the system might be changed a little bit, but the big picture stays the same. That means that innovative new products that really make a difference for patients will continue to have good reimbursement, and that stimulates innovation, obviously. So in that sense, the elections have been very important, and the outcome has been quite supportive, I would say, for the sector, yes.
Okay, thank you, Rudy. I see there are a couple of other questions, maybe one that is coming several times. You have several kinds of strategies within your universe, global healthcare, biotech, oncology. Considering a healthcare fund as a main investment part of a portfolio, should we or could we add oncology or biotech as satellite strategies, and how and why, according to you?
Yeah, they are somewhat satellites. Obviously, those, if you look at a global healthcare fund, a biotech fund, and an oncology fund, as three different funds, directionally, they probably will have the same move, obviously. You can imagine that a global healthcare fund has a very positive year and a biotech fund would have a very negative year. That's very hard to imagine. Obviously, their performance will differ somewhat. So biotechnology is a bit more of a satellite because it focuses more on drugs, basically. It has a higher volatility because a lot of smaller, not yet profitable biotech companies are by nature quite volatile. So they are at the upper end of the volatility scale. A diversified global healthcare fund, which includes then a lot of heavy weightings in big pharma companies, very big medical technology companies like a Medtronic or a Stryker, for instance, orthopedic heart devices. They are very, let's say, constantly growing markets, but the innovation is more a question of evolution in those markets and not a revolution. So that means that those companies are inherently more stable, have a lower volatility. So a global healthcare fund will be at the lower end of the volatility scale, annual volatility scale, and hence risk in a healthcare portfolio. And the oncology fund is somewhere right in the middle. So if you look at the 90-day annualized volatility, it's somewhere in between. It's somewhat closer to the global healthcare as a volatility parameter than it is to the Nasdaq Biotech as a measurement of the volatility of biotechnology. It's in the middle, but a bit closer to a global healthcare fund. So it depends a bit on the risks you want to take. And you would say normally performance comes with risk that you take, and the strategy is managed well, at least. So you would say that, yes, if you want to have less volatility, hence less risk, you would go for a global healthcare fund, like a core of your healthcare exposure. And you could add a biotech fund to give you extra alpha, but to the detriment of a little bit of more of volatility. And the oncology fund is somewhere in the middle. It's somewhere in the middle, yeah. Okay. I would still call it a satellite, but being well diversified over a lot of subsectors within healthcare, like medical technology, life sciences, and so on, it has some characteristics more of a global healthcare fund. Yes.
Okay, thank you, Rudy. I think we've covered the majority of the groups of questions. Many thanks for your explanations. Many thanks for these drivers behind the sector that you explained extensively. A very specific sector calling for specific profiles that you have in your team. And again, congrats for your performances and good luck for the years to come. Many thanks, Rudy. Thank you all for your attention and for your questions. I remind you that a replay will be available in a couple of days. Many thanks again and have a nice day. Thank you.